This is the Equity Management Academy weekly podcast for March 21st, 2022. Food supply chain broken to exacerbate inflation short term. The latest news on the Russian invasion of Ukraine is that Ukraine is urging China to denounce Russia's war in Ukraine. 98% of Ukrainians oppose Russia's war. The war appears to be continuing to escalate. The Fed was planning to raise interest rates. The Fed did raise interest rates a quarter point at their last meeting, but inflation is running at much higher levels than anticipated. The quarter point was already discounted in the market. The invasion of Ukraine means that a great deal of grains and commodities are being lost to the world supply. Ukraine supplies about 30% of the grains in the world, mostly wheat. Demand in the United States is at a high point, but supplies are way down, especially with droughts in the Americas and the loss of the supply from Ukraine. I don't think the conflict in Ukraine and the supply issues are going to resolve themselves anytime soon, Equity Management Academy CEO Patrick MontesDeOca said. The metals markets are beginning to react to the crisis in Ukraine, but inflation is also having an effect. We may be reaching a point where shortages lead to famine in various places. We may be facing the risk of a crisis in food, MontesDeOca said. The shortages will exacerbate inflation, end of quote. Crude oil is also being affected by the war in Ukraine. Crude is back up above $110 a barrel after a brief downturn. We have resumed the uptrend, and we expect much higher prices in crude oil and natural gas. The Nasdaq has moved into bear territory after testing the high of 16,767. We have reverted back up into what appears to be a reversal pattern developing. The stock market indices appear to have discounted the recent interest rate increase and have already priced it in. The mini S&P appears to have found some support too. With record debt levels of $30 trillion in the U.S. alone, the Fed may be unable to continue to raise interest rates. The war in Ukraine just adds to the issues that are disrupting supply chains and raising prices. Technical perspective and standard deviation. Gold. For gold, we use the Variable Changing Price Momentum Indicator, VCPMI, to tell us the average price and when the market reaches an extreme level above or below that mean, which are the best times to enter the market with the highest probability of a reversion to the mean. Gold is between the weekly average of 1937 and the daily average of 1929. It is in a neutral zone with a 50-50 chance of the market going up or down. We want to wait until the market reaches the extreme level of standard deviation where the odds of a reversion are 90-95% probable. For long-term traders, keep your long-term core position. The market is looking to test the upper end of the recent high of 2078. Trading above 1937 will activate a bullish price momentum with a target of 1979 to 2037 for the rest of the week. In the weekly gold report, Nikki the Robot said that the weekly trend momentum of 1882 is bullish. The weekly VCPMI of 1937 provides a bearish price momentum. A close above 1937 negates this neutral. If short, take profits from 1880 to 1838. If long, take profits from 1979 to 2037. Silver. Silver is in the same position as gold, except that it has already activated a bullish price momentum by trading above the weekly average of 25.33 and 25.25 daily, with targets of 25.52 daily to 25.91 weekly. The weekly targets are 26.10 to 27.07 for the rest of the week. The 360-day buy one level of 25.85. If we activate that level, we are going to pick up a lot of steam to reach the 27.07 level. continue to hold your core long positions. Nikki the Robot said in the weekly silver report that the weekly trend momentum of 24.19 is bullish. The weekly VCPMI of 25.33 is a bearish price momentum. A close above 25.33 stop will negate this bearishness to neutral. If short, take profits at 24.36 to 23.59. If long, take profits from 26.10 to 27.07. Bitcoin. We tried to activate a bullish price momentum on the 18th at about 42,363. Then it reverted to trade between the daily average of 41,490 and the weekly average of 40,595. We are neutral. Nikki the Robot said in the weekly Bitcoin report that the weekly trend momentum of 39,657 is bullish. The weekly VCPMI of 40,595 is bullish. A close below 40,595 stop negates this bullishness to neutral. If long, take profits at 43,695 to 45,460. If short, take profits at 38,830 and 35,730. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2Trade.com, or listen to any of our previous episodes.